heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, full market coverage with tech back outperforming as traders brace for a big week of eco data.
And we preview Elon Musk's interview with former President Donald Trump.
Plus, we continue earnings coverage with the CEO of Expedia. But first, let's just check in on that outperformance of tech. And I go away for a couple of weeks and nothing happens, right? Or at least this picture seems to show. We have managed to claw back most of the losses of last week. We're back up again another 0.7%, and the Nasdaq is outperforming the other benchmarks on the day. But we have so much to anticipate. CPI, the all-important read for this weekend.
We left Friday's show with like this element of peril where the Nasdaq 100 could have gone either way. In the end, it closed up a few tenths of 1%. But that snapped 4 straight weeks of declines. Had it fallen, you would have had 5 straight weeks of declines, the worst run of weekly drops going back to May of 2022. We're talking eco data, growth concerns, earnings, central banks around the world. It was a bit of a storm throughout the week with some volatility. Let's get more on the markets with Bloomberg's Isabel Lee. And we can either start looking back at last week and asking Isabel what happened, or we can look forward to this week where the market, particularly technology investors, are looking at eco data.
I want to give a quick overview of markets because that day is still wild to me. We have the S&P falling around 3%, VIX jumping 23 to 65. We have the 2-year and the 10-year inverting, Bitcoin tanked, yen strengthened. So it was really a Monday meltdown. But everything after that seemed to regain its footing. And we have the S&P finishing flat on the week. And we really just have these investors who kind of panicked just slightly and really sold off all their stocks. All the reversal trades we've been seeing reverse and the momentum trade fizzled. But where do we go from here? This week, we can expect a little bit more volatility because we're just going to see a slew of data. And as we know, investors really digest each of these data very closely, more than any other time in history. We have on Tuesday, PPI, Wednesday, CPI, Thursday, industrial data, jobless claims, retail sales, and on Friday, consumer sentiment. So really, it's just going to be a light week for us, Ed.
Isabel, keeping it US focused, I mean, is also an international play of this. The Japanese yen actually significantly weaker on the day. But what also caught my attention was one of the most read stories on the Bloomberg was talking about this slashing in equity exposure. We still have that feeling of just trim, just perhaps start to diversify that little bit more, having seen the volatility of last Monday.
That exactly caught my eye. Also, we have Deutsche Bank data saying that investors slashed equity allocations at the sharpest pace since the onset of the pandemic. And just 3 weeks before, we were at the 97th percentile. So you really see the shift in sentiment. It's just interesting how just 3 weeks ago, investors were really kind of optimistic about the economy, about the soft landing. And now they're like, oh my gosh, the Fed took too long to cut rates. We're stuck in the mud and we're seeing all this panic. And we know how these things go. When they panic a little, it always overshoots. And it's summer. Volatility is light. Even the VIX spiking, many were saying, was really technical. It wasn't really indicative of the outright panic that we usually see when we associate these with the VIX. It's really more technical because we have light liquidity, stretch sentiment, a shift in positioning. So it's really hard to read markets, especially during the summer when we all should be on vacation. But that's the thing. Investors are not liking tech. But here's another thing. The great rotation trade we saw when people were selling big tech stocks into small cap, well, now that has fizzled. We have last week traders really pulling out $2.6 billion from BlackRock small cap ETFs. So I don't know. Maybe that was just a blip. Maybe investors are shifting again. It's really hard to read right now.
Bloomberg's Isabel Lee across the markets in a deep way. I would also point out the biggest points movers to the upside right now is NVIDIA. And I want to bring in Daniel Newman, the Futurum Group CEO, new approach to research and advisory. And I don't know. I don't think it's premature to say NVIDIA reports August 28th, and we just went through the eco data and the impact of central banks. That's a big calendar item for everyone that watches this market. Good morning.
Ed, good to see you. Yes, I mean, after the first wave of big tech, there isn't an earnings report that's more in the throes of everyone's hearts right now than what's going to happen with NVIDIA. The AI bubble bears, as I like to call them, are looking for something to break. The announcement of some delays on Blackwell got a lot of excitement last week. but maybe was muted a little bit by everything that went on with the macroeconomy, Ed. And then on the other side of it, the bulls, they're listening to all these CapEx reports. They're listening to what Zuck had to say, Sundar, Satya, all of these companies intending to spend big on CapEx. And that tends to be a win for NVIDIA. So if you're looking at what's going on, you're saying AI is booming on the CapEx side, on the investment and the infrastructure side. But the bears, Ed, the bears are saying, well, how is that turning into practical use in the market? And that's created a big gulf.
Okay, let's dwell on that big gulf, therefore. Is it that if you're going to buy some of the volatility that we've seen of late, buy into some of the lower price points, you do it with what's already won, the NVIDIAs? You don't do it with a breadth that we might see of AI working in software and the like?
Yeah, Caroline, I like to talk about this ingestion period that is going on with AI. It isn't going to happen over the next, quarter or two, where AI is going to be democratized and implemented into every enterprise. We're seeing small wins. We saw Palantir had a great quarter. We saw ServiceNow showed some really resilient results against some of the people betting against software. But we're also waiting to see strength from companies like SAP, Oracle, IBM looked okay. These are the companies that are doing the implementations of AI. But if you're looking at this big spend, this predictable big spend that's going on, all the big tech, mega tech companies are basically saying, we don't want to be the Blockbuster, the BlackBerry of the AI era. We're going to spend in advance. Zuck did a perfect job on his earnings call and nobody flinched. Some of the other calls were met with a little bit more resistance because the justification of CapEx wasn't as clear to the investors.
The justification also of a fundamental change in policy from the Federal Reserve. How much does the broader macro backdrop paint a picture for whether you should be buying tech at the moment, Dan?
You and I have had this discussion a few times on this show, Caroline, and I've said tech is incredibly deflationary. It's going to enable companies to do more with less resources. We've seen the job numbers in San Francisco go back to the pre-pandemic levels. We're seeing cuts. We've heard about Cisco, Dell, major cuts over the past few weeks. And this has been necessary, but also these companies, the whisper conversations I'm having with CEOs is they believe AI will enable a prune to grow strategy. They can make some cuts in their overhead, in their cost, and in their human capital in order to create scale and create growth. So that is the opportunity. At the same time, we are still waiting to see, is the macro okay? You look at some of these credit numbers, you look at some of the loan default numbers, you look at some of the consumer confidence numbers, the market isn't that strong despite that we're not in a recession. So we're balancing these couple of things, but tech is ultimately deflationary and ends up being a good bet for investors, especially long investors.
Dan, in tabulating headwinds and tailwinds, in which column does regulation sit for AI?
It's a great one. I believe it is a headwind, but Ed, I do believe, like every technological megatrend that we've had, regulators will always be playing catch up. They're going to be playing defense. I've had a number of conversations about what NVIDIA's stature is in relation to regulation. We're hearing some of the concerns across Europe, in the US, probes. Of course, we saw what happened with Google last week. The regulators want the markets to understand that they're going to play a role, but at the same time, the US is very steadfast to stay in the lead on innovation. With that in mind, I think M&A is the area where regulators will be the most involved. They're going to make it difficult for these mega cap companies, the Microsofts, the Googles, now NVIDIAs, Amazons, to make acquisitions. We saw Microsoft sort of doing an interesting move on one of their most recent acquisitions. And that is going to play into this. They're going to be playing the cat and mouse game, but the regulators are going to have a really hard time at keeping up.
Daniel Newman, great to have you on the Futurum group. We appreciate it. Meanwhile, coming up, look, Elon Musk will be sitting down with Donald Trump later today. We'll discuss what to expect. That's next. This is Bloomberg Technology. Elon Musk and Donald Trump, well, they're slated to sit down for an interview this evening on X. It will be the first public interaction between the two men since the Tesla CEO endorsed the Republican nominee last month. Let's discuss it all with what to expect with Bloomberg's Kurt Wagner. So, timing for us, what we anticipate in terms of subject matter?
Yeah, so this is scheduled to be at 8 o'clock Eastern time, so, prime time, if you will. In terms of what to predict, I mean, these are two incredibly unpredictable people, as you both know. I imagine that, we'll hear President Trump go through some of his key points, especially the ones that we see Elon Musk continually tweeting about. That's, immigration, some of the social issues, maybe around DEI, trans rights, but certainly the economy, right? I mean, this is one of the things that I think President Trump talks about a lot, and that Elon Musk will matters to him, of course, with Tesla and EVs and all the regulations around there. So again, as far as you can predict, I think those are pretty safe predictions, but with these two, you just really never know where the conversation is going to go.
Okay, so Musk has spoken about his attitude towards Trump. Let's reflect on that. Listen to this.
I guess that there would be like some impact, but I think it would be devastating for our competitors, but and it would hurt Tesla slightly. But long term, probably actually helps Tesla. That would be my guess.
Impact to Tesla hurts slightly competitors long term, but then he's also got his Boeing cap on, his SpaceX cap on, Neuralink, etc. You're right, he's unpredictable. Do we have any sense if they have common ground on some of the other Musk companies in Elon Inc.?
Yeah, I mean, I think that clip sort of gives you a sense, right? Is like even Elon sees that there is a long-term benefit here to having Trump in the White House. I think they align probably on crypto, right? Donald Trump has sort of come out and been the pro-cryptocurrency candidate here, which Elon may care about. I think, the idea of when President Trump was in office, he cared about space. He cared about the Space Force, this idea of protecting the country through space, right? Obviously, that's a huge part of Elon's portfolio. So I do think there are some areas here where these two overlap. I think there's also a benefit here, a potential mutual benefit of simply getting the former president back onto X, where Elon is, trying to drum up attention, trying to build a base. And I think that could be another side effect here of this conversation.
And it will be interesting to see if X can handle it. All of those people tuning in, Bloomberg's Kurt Wagner, will get you back on to discuss later in the week. So Trump's attitude toward electric vehicles and charging is likely to come up during that conversation. After all, Musk is the head of the world's EV incumbent Tesla, and the former president talked about EVs at length in that interview with Bloomberg Businessweek just a few weeks ago, suggesting the topic is also top of mind for him. Let's discuss with Terry O'Day, COO and co-founder of InCharge Energy, which provides commercial fleet charging solutions. Terry, good morning to you. Is your industry waiting and bracing for this to be a guide of Trump policy on charging infrastructure and EVs?
Well, I think that it's clear that Trump has staked out a position here. But what is also clear is that the march towards electrification in this country is inexorable at this point. The total cost of owning an electric car or an electric truck is now lower than gasoline or diesel. And people are making decisions based on that economic factor. So we think that the market will continue to march forward. And perhaps, as Musk said, this is a short-term blip.
Okay, so what, if anything, do you think could knock what has been ultimately, from a consumer standpoint, a stagnation in interest in EVs? What are you seeing from the business side of it? Is that not been the case?
Well, there is definitely a slowdown. I think there was this past year, there was a glut of supply in the market for chargers and for vehicles, and companies adjusting to their capital decisions. What we're beginning to see is thinking coming from some of our major customers like Pepsi and FedEx and UPS and Walmart. They are planning multi-year rollouts now of electric trucks and medium-duty vehicles. And so we're doing the charging stations, planning their long-term plans for their facilities, and they're making investments over a multi-year calendar that is, very different than the political calendar.
Terry, the Biden administration gave Elon Musk and Tesla the cold shoulder, but focused on the IRA, which gave benefits to your industry, right? How much do you want to see Trump give some substance about how he'd handle funding and investment into EV infrastructure? Is it something that you kind of think is important to carry forward?
Yeah, those infrastructure bills had a major impact on this industry. We have now school buses being deployed with school children being driven to schools this month in electric vehicles, in electric school buses as a result of the Biden infrastructure bill. We have additional investments coming for public charging stations across the US. And those investments should continue to come forward because that is what will enable consumers and fleets to feel comfortable driving these vehicles and making this choice in the long run.
But there's a politicization, Terry, that's unavoidable of oil versus EV. Is there any risk in your mind that it gets unwound?
It's definitely, this industry has been started in part by forward-looking regulation and by these kinds of public investments. Commercial investments, as I suggest, are very important and are moving forward. The whole thing will continue to go faster if there is investment from the public sector and if these regulations continue. So there is some real risk for sure.
Terry O'Day, I'm sure you'll be tuning in later to that X discussion. We thank you, InCharge, co-founder, COO. Meanwhile, let's just talk about WeRide for a moment. It's a Chinese self-driving automotive company. It's seeking to raise as much as $440 million in a US IPO and concurrent private placement too. It was granted approval last year by the Chinese securities regulator for a US listing and is offering 6.45 million American depository shares, which would give WeRide a market value of about $5 billion at the top of its range. It's based on a US SEC filing. Ed, what are you looking at?
Okay, let's get some more news stories in Talking Tech. And first up, India's Bharti Global has agreed to buy a major stake in BT Group. Bharti is set to purchase a 24.5% stake from shareholder Altice in a deal that would bolster the company's international expansion. The stake gives the Indian firm a marquee holding in the United Kingdom. Plus, film studios have dropped its opposition to a California measure that would give actors more leeway over AI face usage. The measure would implement new legal safeguards for performer contracts in using digital replicas of voices and likeness. Lawmakers have until the end of this month to pass the measure before they adjourn. And it's a return to formula for Disney, the company announcing a slew of sequels over the weekend at its D23 event in Anaheim, California. This after recent billion-dollar box office successes from Inside Out 2 and Deadpool and Wolverine. Movies slated for release include Moana 2, Zootopia 2, Incredibles 3, Frozen 3, Toy Story 5. You get the idea. This is Bloomberg Technology.
A sad loss for the technology industry over the weekend. Susan Wojcicki has died after a 2-year battle with cancer at the age of 56. Wojcicki was an early Google executive and longtime head of its YouTube video platform who shaped how fortunes and fame are created on the internet. Wojcicki was one of just a few women at the top ranks of the tech industry. Bloomberg's Mark Bergen joins us to discuss her legacy, and as Sundar Pichai put it himself, she is as core to the history of Google as anyone. It's really hard to get our arms around really the extent of her impact there, Mark.
Yeah, it's absolutely. I mean, it all starts with literally her garage, right? She kind of famously lent that out to Larry Page and Sergey Brin in 1998, and they formed the company there. She joined shortly thereafter. It was sort of this quiet presence. I had sources that told me that kind of one of her nicknames inside the company was like the mini CEO. Because there was this leadership she was one of these leaders that basically ran a lot of these operations and management for the founders were sort of famous for neglecting that at the time, right? They were sort of the visionaries, and Eric Schmidt that kind of came in as the adult, and she was responsible for building out a lot of its core advertising business, and that was one of the main reasons that she was brought over to YouTube in 2014.
Mark, she announced plans to leave YouTube in February of 2023 and talked about other projects focusing on her health. But I don't think at that time she or the company elaborated on why. The main point being that she had a profound impact on YouTube. You've written about it in your book. What are kind of the key actions she took during her time as CEO and a leader there?
Yeah, one of her key priorities was to really spotlight the creators. And I think even, this is 8 years ago now, 10 years ago now, and this idea just this nascent idea of influencers, of online creators, it still wasn't really proven as a business. And I think we can certainly say that that's changed dramatically. Like one of their initial campaigns was to actually kind of spotlight a lot of these homegrown creators. For a long time, YouTube tried to get celebrities to come onto the platform. I think the shift when Wojcicki took over was, hey, we have our own kind of A-list style celebrities right here, these homegrown YouTube stars. Of course, as we've covered a lot, that has its share of problems, right? The brand safety issues that she dealt with over the tenure. I think that the focus on advertising, sort of her core strength, has paid off in the extent of that YouTube as becoming this dominant advertising platform. The other areas that it's no longer, it's dropped its plans to compete with Netflix and Amazon Prime. It's still kind of a YouTube Music is a service, but it's nowhere close to Spotify. I think her legacy is primarily going to be building out that what is still remains Google's core business. And at the time she took over, there were still questions about could YouTube turn a profit. And now it's obviously one of the key pillars of Google and Alphabet's growth.
Mark, while making a profound impact at Google, she made a profound impact for many women in technology. And I know that many have spoken about the way she tried to show up as someone who had some sort of work-life balance, dropping their kids at soccer in a minivan, taking that maternity leave, speaking out about it, Mark. But how else have colleagues, have former people who've worked alongside her, sat on boards with her, thought about her and her loss?
Not just taking the maternity leave, I think she's widely credited for actually forming it at Google. The founders didn't really think about that when they created the company. So it was the first one to actually write that policy and to take it. I think this is certainly the women I've talked to there. This is like clearly a strength of her leadership, being out there very publicly as a mom. I think it's really interesting to contrast her with Sheryl Sandberg and Marissa Mayer. It's like her peers that certainly had a much bigger public profile. And I think Susan Wojcicki, from what I understand, personally didn't want that high public profile. And maybe for Google strategically, it's actually been quite important. I would argue that it's not like Elon Musk and X. It's not like Mark Zuckerberg at Facebook. You don't have this one executive well known for this platform. I think that's maybe one of the reasons why YouTube has, in many ways, dodged some of the criticisms that other social media sites have dealt with. There's some people that come out and argue that's because Susan is a more sort of astute and mature leadership. And perhaps it's also because she just had this background role. She was not a public profile.
Bloomberg's Mark Bergen, thank you. Susan Wojcicki was 56. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
And Caroline Hyde in New York. Let's check in on these markets because we're taking a turn a little bit, Ed. Some hard sell-off. Maybe look at the names like Meta, which are dragging the index lower on the Nasdaq 100. We're now only up by 0.1%. When we first started this show about half an hour ago, we were high to the tune of 0.7%. So clearly the moon music just shifting a little bit around certain names. We had been still seeing some of those high flyers that have been reloved after last week's beat up, still helping drive just onto 11-point gain, but it's not much. Now, remember, the carry trade has been something we've been talking a lot about. Of course, the Japanese yen, the volatility of this time last week, much of it evidenced in the yen. We're weaker on the day versus the US dollar, so some reprieve there. But I'm looking at Bitcoin, actually up by 1.7%. Interesting that we've got a player such as Marathon making moves. Let's just look as we see Bitcoin at 59,514. What is Marathon up to? Marathon Digital down by some 8%, of course, and Bitcoin miner, but they're actually selling convertible equity, so with convertible bonds that could turn into equity ultimately to be able to buy Bitcoin. They're once again putting it onto their balance sheet, but when you sell converts, of course, we're down to the tune of some 8%. Nvidia still leading us higher, and looking at the points perspective on the Nasdaq 100, we're up almost 4%, all eyes on August the 28th when we get those numbers, but we've got a long time to go till then. And I'm looking at Intel down by some 0.8%. Look, they're actually postponing a very key event, Ed, that I want to dive into, because here is a name that got beaten up after its earnings. They're having to cut costs, cut headcount, and it's proving out and sort of cutting their marketing spend as well. What have you got on it?
Well, let's bring in Bloomberg's Ian King, who hopefully has answers. I mean, you and I have sort of wandered across the newsroom to each other's desks and said, well, there's not a lot of good news to be had for Intel at the moment. This expo is not a major headline, but it continues the negativity really around the name.
Yeah, there are a couple of things we need to think about. Intel used to basically set the agenda for the whole of the computer industry with its conferences. Right now, what investors want is somebody from Intel to walk out on stage and say, hey, look at this new thing, to basically change the conversation, to get people excited about what they're doing again. If they're canceling events, how are they going to do that?
Just talk about the relevance of this event, Ian. It was all about developers. How are they trying to earn back the reputation of leading the sector that they're so well known in, rather than, playing catch up to the names that are doing well, such as NVIDIA?
Yeah, I mean, I think you already answered your question in the question. Unfortunately, they're not right now. That's
Busted.
The problem. Yeah, the accelerators, which is the key AI market, that's what's leading in that crucial data center market. For them, that's an NVIDIA story. It's not an Intel story. Intel has hundreds of millions of dollars of sales in that market. NVIDIA has close to $100 billion of sales in that market. So right now they're nowhere, and we need to see something from them that changes that narrative and changes it quickly.
I went back and checked the statement from Intel, because believe it or not, Ian, I was invited. I got the save the date for innovation. But the last line is, please stay tuned for several exciting product and technology announcements coming this fall. So they're working on something in the meantime.
Yeah, I mean, what they're going to do is concentrate on some smaller events, other people's events, smaller events of themselves, to try to, again, draw attention back into what's going. But right now, there's a real sense of like, come on, show us something, anything, right? That's what people want.
Ian King, always so on the money. We thank you so much. Meanwhile, look, let's turn to Apple now, because just a month out from the release of its iPhone 16, which is expected to keep sales stable, but is it bringing major innovation? Let's talk to Mark Gurman all about it, because he covered it in his weekly Power On column. And ultimately, your argument is, look, we're not getting that much rich innovation coming from Apple at the moment, even though they can really talk up the AI side of things.
The iPhone certainly will sell well this fall, right? They're probably going to produce between 80 and 90 million units, we've reported. But there's not going to be major growth over the prior year, or the year before that, or even the year before that. This is a company that is making essentially minor changes on an annual basis to their phones at this point, right? And that's going to continue with the 16 line. You're going to see a new button, at least on the Pro phones, that turns the phone more into a DSLR. You'll be able to lightly press it to autofocus, and hard press it to take a picture. So that will be cool. But bigger changes will come next year, including a new, slimmer iPhone 17 model to replace the iPhone 16 Plus. As well as a new lower-end iPhone SE, which could really boost sales in emerging markets.
Mark, Bloomberg Technology senior producer Jackie Lopez doesn't allow props, so I'm gonna demo like this. It's a DSLR camera that I'm pretending to hold. That's it? That's the innovation they've come up with for iPhone 16 generation, a button for the camera?
Well, it's going to be a cool button, and I think a lot of the other
cool
phone makers, Samsung, Huawei, et cetera, you can expect them, they're going to copy it down the road. It'll be a little bit of a gesture area, so you can swipe left to right, right to left, to move between media modes and zoom in and out. There's also going to be larger screens on the Pro models, faster processors, and of course, the big push is going to be around Apple Intelligence. Right now, only the Pro 15 models support Apple Intelligence. Now all 4 iPhone models will support Apple Intelligence, because they're adding additional memory and horsepower. So certainly that's going to be a significant deal there. But I personally don't think Apple Intelligence right now is something that you're going to see really boost sales. I think that's going to happen next year or the year after, as people are making more upgrade decisions from older models that don't support it.
My team are not happy with the demonstration that I gave, but we appreciate the reporting. A camera button on the next generation iPhone. A cool button. Bloomberg's Mark Gurman. Thank you very much. Now, coming up on the show, we're going to take a look at IPO trends, AI investing, and much more with Mitchell Green from Lead Edge Capital. That conversation coming up next. This is Bloomberg Technology.
So last Last week's market volatility has not yet deterred the handful of issuers working on September listings over in Europe. Bankers say, though, top-end pricing may prove elusive. Partners Group Holding is still weighing a launch of the IPO of German metering company Techem as soon as September, joining others would-be issuers eyeing the September window, like Polish retailers Zabka and academic publisher Springer Nature, also all looking at second-half listings. That's over in Europe, but let's talk about US IPO, the window, if it's open or not, and really what's on track in terms of exits for the VC community. Mitchell Green, founder and managing partner of Lead Edge Capital, joins us now for our VC Spotlight. And how are you feeling? You got any optimism around this window amid a political agenda that keeps things volatile too?
Political agenda. There's no, policy, things like that going crazy. But no, it's funny. Jefferies put out a report about 10 days ago saying that the IPO market was, open and ready for business. And then, the markets, we joked internally, maybe it was a week too early. That being said, if you look at how the IPO market is open, and if you look how the companies that have gone public, Rubrik and some Instacart and some of these other ones have traded, they've actually done remarkably well, but yet you wouldn't know that based on the volume, which is like almost dried up to next to nil. However, I think you need to step back. In 2006 to 2009, when companies went public, they would raise, $100 to $300 million. Microsoft in 1988 or 87 probably raised $40 million. When those companies went public, they never raised money again. Now fast forward to 20 and 21, companies were private and raised $100 to $300 million. So now fast forward a couple of years, and you basically have two types of companies. You have great companies, and those companies have hundreds of millions of dollars of cash, have hit their numbers, and they could go public tomorrow. And they would go public at probably a reasonable valuation. Some would go higher than the 20 and 20 run round. Some would be flat. But again, and then there's a whole class of companies that couldn't go public because they haven't performed. Yeah. But those that could go public. Why go public when you have $300 million of cash?
I mean, but that was the same thing as Microsoft. And Microsoft went public, didn't need to raise money, but it needed a liquidity moment for the people that worked there and to ultimately have the rigor of being a publicly traded company. So is that the same for the business models now?
I think what you're seeing is that it will definitely make them more rigor. The whole process and, of being public today is way more expensive and way more time consuming than it was 25, 30 years plus years ago. So you're just seeing companies wait to be even bigger. The markets are totally changed. It was a world of active investing, individual stock pickers, more and more of the markets becoming passive ETFs. If you're a sub $5 billion market cap public company, it is not fun. Okay. Just, ask small cap guys who come in here. At some point, the Sequoias, the Lightspeeds, the benchmarks of the world will be telling these companies, now they're 300 million, don't go public. But at some point, 500, 600, 700 million of revenue, they are going to say, listen, you need to go public, you need the liquidity. For the best companies, we're just not seeing that right now at all.
Well, Mitchell, something that's different now probably is more liquid secondaries markets. But there does seem to be a willingness of the private market to have a longest role, support companies later into life. How would that impact the here and now of an IPO window?
Well, Ed, I think that's a great thing you said. It's 100% spot on. Without going into the details, we have a company in our portfolio. It's $300 million of recurring revenue. It's growing 60+% a year. It has, $250 to $300 million of cash. They have just completed a several $100 million secondary, and from private investors at a flat to slightly up round from 2021. And they historically would have gone public. But instead, the CEO and the board and management team, if we agree with, is why go public and operate as a $300 million public company, $1 million revenue company? Just continue building your business. You're in a giant space. Go public in a few years now when you're ready and the company is even larger. But so, by the way, that is facilitated by large secondaries, 100%.
We reflected earlier in the program about the volatility in public markets. Looking ahead, would the outcome of November's election cause a pause or an acceleration for an IPO window, to your mind, Mitchell?
It depends if you get more days like, the yen current, the yen trade unwinding, the yen carry trade, and things like, last Monday don't do, good things for it. You wouldn't have been one to price an IPO on Tuesday or Wednesday. I think things have settled down a little bit, but you never know. I think things will get more volatile as you get into the election cycle, but I've learned not to try to pontificate on what politics are going to do to financial markets.
But politics affects certain portfolio companies. You wrote a check to ByteDance, for example. How much do you worry about Chinese companies tapping U.S. markets?
I knew you were going there. The great thing, so ByteDance will at some point go public. No idea when. It will be in Asia. It's not going to go in the U.S. People ask me, you made an investment. Don't you worry about their U.S. business? Their U.S. business is a very small part of the overall business. Frankly, I would love, it sounds crazy to hear me say but actually if for some reason, if the U.S. business got rid of, then they would be probably more likely to go public sooner. That being said, I think they should fight for it. I don't think the U.S. really has the right to just tell us, tell companies, you must shutter this business. I can tell you this, what two companies in America would love to see TikTok gone? Okay. Facebook and Snapchat. You can assure the lobbyists are all over that in Washington. And I think what's important to realize is that the Chinese have always wanted to build a truly global business. They've wanted the Nike of the world. Nike's in all these markets around the world. The Chinese have never built this kind of company. They finally have done it with TikTok, and I expect them to try to push that around the world. And I think the whole idea that they're spying on us and trying to influence things, and I'm sorry, Facebook doesn't try to influence things at all, through the social media and things like that. So.
Mitchell Green, founder and managing partner of Lead Edge Capital. Thank you very much. And crypto startups, by the way, also raised more money in the second quarter of this year, totaling $2.7 billion, but they closed 12.5% fewer deals compared to the first quarter, mirroring a broader slowdown seen in the digital asset world. Indeed, crypto market bellwether Bitcoin fell 13% in the second quarter, and there's been little change so far this quarter. Karen.
I'm coming up. We're going to be talking a little bit more about the public markets. We're joined by Expedia CEO Ariane Gorin to break down the company's earnings results, what it says about the consumer. This is Bloomberg Technology. Welcome to our worldwide audiences on Bloomberg TV and Bloomberg Radio. Expedia, it posted better than expected second quarter results. However, the company did warn of a softening in travel demand in the current quarter, and therefore it adjusted its expectations for the rest of the year. Let's dig into the details. Expedia's CEO is with us, Ariane Gorin. And Ariane, you managed to get the nuance because shares absolutely popped on the fact that you'd managed to do what you needed to do and delivered for the quarter that we were posting on, but then you downgraded for a second time. What is the consumer telling you right now?
Well, first, thank you for having me. We were very happy with our second quarter results. We saw an acceleration in our consumer business, which is what we were looking for, and then continued strength in our B2B segment and in advertising. But it's true, as we look at the third quarter, we have seen some softness. It's been a few quarters in a row that air ticket prices have been coming down, that the price of car rental days have been coming down, and we just started seeing a bit of that also in the third quarter, so we're keeping an eye on it.
Ariane, good morning. It's Ed in San Francisco.
Hi, Ed.
Away from the United States, it's been an incredible summer in Europe. The Euros, football or soccer tournament, the Olympics. Why is that sort of event-driven process not more of a confidence giver for you in your outlook?
Yeah, well, first of all, I would say events-driven travel is a true trend, whether it's sports, whether it's concerts. You know, with Taylor Swift's concert tour the last year, you see that really drives travel into destinations. So that certainly plays into our optimism. But again, when we look at our forecasts, we're looking at what's happening on pricing, what's happening in demand. And again, in the long term, people certainly want to travel, which is what makes us sort of optimistic in the long term.
Ariane, what's the technology story for you? If you're going to drive that outlook a little higher than you've already given, is there a way you can more closely match what people are searching for? Maybe the budget-conscious consumer as well, if the consumer is in real time pulling back.
Yeah, well, you know, the great news is that because of the work that we've done on our platform in the last few years, in particular around having a customer identity across all of our brands, we have a better understanding of the traveler across all of our brands, looking at what are they searching for, what are they interested in, which allows us to make more personalized recommendations that are more relevant for each traveler.
Let's talk about the brands and brand loyalty. Before we do that, we just want to remind our audience of TV and radio. We are sat down with the Expedia CEO, Ariane Gorin. And what's really interesting is you have this rollout of sort of a brand loyalty program, One Key, beyond the US and UK, but you're slowing it slightly. And there was an impact perhaps to Hotels.com users and the loyalty programs they had. Can you tell us about what the ultimate goal is there and why you've slowed it a little bit?
Sure. So we actually just came up on the 1-year anniversary of our One Key loyalty program. We launched it last summer in the US, and it's a program that ties together Expedia, Hotels.com, and Vrbo, which are our 3 biggest brands. It allows travelers to earn and burn One Key cash across all of the brands and also benefit from higher discounts, especially in hotels, sort of the more loyal they are. We've been pleased with the results in the US, and we've just launched in the UK. But as we step back and looked at other countries, you know, what we realized is this is a program that works the best when we have all 3 of our big brands operating at scale. And in many countries outside of the US and UK, we have one leading brand. So what we're doing now is we're looking at how do we make sure that we have the strongest loyalty value proposition in each country for the brands that are there. And the good news is, even before making any changes, all of the loyalty members outside of the US and UK are already benefiting from the higher member discounts.
You are relatively new in this seat, May 2024 as CEO. You were on the board a bit before that. But Ariane, you came from the B2B offering, the advertising offering, which you've just articulated is going really well. How, therefore, can you bring your learnings from that to the consumer? How are you focused on driving better margins growth from a consumer that, as you say, at the moment is nervous?
So I would start by saying our consumer business has 3 very strong and well-loved brands in Expedia, Hotels.com, and Vrbo. And they all have great value propositions. You know, my experience, and I think anybody's experience in business, is always that you want to make sure you understand what does your customer need, and then how do you have a value proposition that matches it. And so what I'm focused on with the team is making sure that from our technology to our supply to the way we market, each of our brands is very strong in addressing a particular customer need.
Ariane, what's the one single biggest headwind or risk to you and to a consumer's choice to travel for the remainder of this year?
Look, I would go back to what I talked about earlier, which is, you know, prices coming down somewhat. You could say that's sort of a headwind in the sense that, you know, as you report earnings, obviously prices have an impact. But I like to see the glass half full rather than half empty. And when you consider it that way, you think, well, travel's maybe becoming more affordable.
It's great to have some time with you, Ariane Gorin, Expedia CEO here in New York. We thank you.
Thank you for having me.
Now that does it for this edition of Bloomberg Technology. Ed, what a thick and fast conversation from public to private. We've got so much more for the rest of the week as well.
Caroline is back in New York City. We got Pyle and Marguerite with me here in San Francisco, Jackie, John and Justin in New York, the team in the control room. Brace yourselves. A big week to come. Don't forget to check out the podcast, by the way. You know where to find it. The Terminal, as well as online on Apple, Spotify and iHeart. This is Bloomberg Technology.